Hello guys, I hope you are doing good. On 29th of September, a new IPO is going to hit the market, that is UTI AMC, Unit Trust of India Asset Management Company. In this video, we are going to discuss everything about the IPO, what the factors that are affecting this company, what the company's financial performance, what are the risks the company is being exposed to, grey market premium, and at the end we are going to conclude the discussion with a review that whether one should invest or should avoid this IPO. So without any further, let's start. The issue details. It starts from 29th of September, closes on 1st of October. The price band is 552 to 554 per share. Lot size is 27 shares per lot. Issue size is 2,159.88 crores, in which equity shares of 3 crore 89 lakh 87,081 are going to be offered. Important dates: it opens on 29th of September, closes on 1st of October. Finalization would be done on 7th. Refunds would be initiated on 8th, and credit of shares would be given to the demat account on 9th of October. Tentatively, the listing date is kept at 12th October. About the company, it got incorporated in 2002. It is India's second largest AMC in terms of assets under management. It manages mutual fund, PMS, retirement funds, offshore funds, and AIFs, that is alternate investment funds. Footprints: it has around 163 FCs, that is financial centers. It has 273 BDA, that is business development associates, 33 POI, that is point of acceptance, 51,000 IFS, that is independent financial advisors. It currently manages around 178 domestic mutual fund schemes. Currently, it has around 1,336.3 billions of rupees quarterly average assets under management as on June 2020, which makes this company as the 8th largest in the industry. It has around 10.9 million active folios as on financial year 2020. So that is around 12.2% of total mutual funds folio. Funds end use: the total issue size is of 2,159.88 crores. The whole issue is offer for sale. So offer for sale means the whole issue, the whole fund, each and every penny is going to go to the investors who are selling the stake. So it's just change of ownership. Currently, SBI, LIC, Bank of Baroda are selling a stake of 1 crore 4 lakh 59,949 equity shares each. In PNB and TRP, that is T. Rao Price International Limited, are selling 38 lakhs 3,617 equity shares. Growth in SIPs or AUM. In March 2018, the SIP was standing at 73.6 billions of rupees. In 2019, it went to 90.2 billions of rupees. December 2019, 101.6 billions of rupees. Thus, this was a era of before COVID, pre-COVID. So it was a increasing year-on-year basis, which is a good sign. In March 2020, there was a realization of the funds. At the same time, many people would have stopped the SIP, which led to a decrease in that particular month, which went to 78.6. But however, post lockdown, the SIPs have been picked up, and as on June 2020, it is around 99.8 billions of rupees. Financial performance: revenue is being decreasing year-on-year basis. So right from 1,150 crores to 854 crores. Even PBT and PAT, that is profit before tax and profit after tax, is also decreasing from 405 crores to 276 crores. So which is a key concern for the investors. Key metrics or ratio: rising shares of equity and PMS in AUM. The total revenue of the company, if we look deeper into it, 72.7% comes from management fees. And in management fees, the equity, the fees for equity assets under management is quite high. And company is focusing into that and is increasing its equity assets under management. As on 2018, it was 30%, and in 2020, it went to 42%. Net profit margin stands at 32.6% at 3 years average. ROE is at 12%. ROA is at 11.4%, 3 years average. Risk: revenue has seen a decline of 19% year-on basis. People are preferring to invest directly into equity, which is little bit demotivating for mutual fund industry. There is increasing competition. Currently in India, there are around 41 AMCs which are active. So creating that alpha return and dragging or attracting or seducing the investors to invest in your scheme is very difficult. The competition is very tough. Sensitive to regulatory changes. So every now and then SEBI is coming with new regulation, new rules which are affecting the securities market, and it also affects the mutual fund industry because most of the mutual fund industries are targeted at equity segment. Further, recently, if you could recall, SEBI came with a new, notification or the regulations where it capped the total expense ratio of each schemes depending on the type of the scheme. So, which was very, very, impactful, and it created a, big change, or I would say big impact for mutual fund industry. So, same thing. If there is any changes, then it would directly impact the mutual fund industry. So, it's very sensitive to regulatory changes. Conclusion. Currently, the price earning ratio is being, currently it's at 25.7 times, which is fairly valued. Recently, company has also granted an ESOP at 728 rupees per share in financial year 2020. If you can check the red herring prospectus, exercise price of options granted during the period, that was a fiscal 2020 at 728 rupees per share. So, which, I believe that the true person, so I would say the true image of the company can be looked from the person who is working in that company. If the people are granting an ESOP at the price of 728 per share and this issue is priced at 554, that says a lot about the, people's expectation, or the people who are working in the company's expectation of this, growth. Growing AUM, this assets under management. However, the key concern is declining revenues and profit and its sensitivity to the regulatory changes. These are the key concern. Currently, grey market premium is at around 96 to 101 rupees per share, so which is not that lucrative from my point of view. So overall, looking into the company, declining revenues, fairly valued, ESOP at 728, growing AUM sizes, in my opinion, it's better to avoid this share. Because, the main concern is declining revenue. When your assets under management are increasing year on year basis, how come your revenue and profit are decreasing, right? That's a key concern for me. And when I have a good companies, other options available to me, why I would invest in this company? So it's a little bit riskier, I feel. So currently I am planning to avoid this IPO. Yeah, so I guess that's it for this video, guys. And I just like to leave you with one disclaimer that don't blindly follow my research. Do your own research. Go to the website and download the red herring prospectus. Read it through. It would give you a good insight into the IPO, into the company. And also, if you're not sure, consult your financial advisor before avoiding or subscribing this IPO. So with that being said, thank you guys. Thanks for watching this video. And if you like this type of video, please give a thumbs up. If you have some questions, suggestions, you can mention in the comments below and I will respond them as soon as possible. And share this video with your friends and subscribe my channel. Thank you guys. Thanks for your time. Bye.